Hello friends, welcome to the target series of RBWM. As you know, in target series we are covering all the subjects of RBWM, of JAIIB basically, your PPB, Indian economy, accounts and RBWM. We are covering all the repeated questions from the exams, plus the theory, plus the numericals, plus the objective questions. Whichever is applicable, we are covering this. So follow the series till the end, share it with your friends, like the channel, subscribe to the channel. Many free things you are getting on YouTube on this channel. Subscribe to this channel, Officers Adda 24/7 English channel or JAIIB CAIIB English channel. Okay? Subscribe to this immediately. It's very helpful to you. What will I be covering today? I will be covering additional reading on home loans and lender's appraisal process. Means basically it's a appraisal process. Main part in this is appraisal. So I'll be covering about appraisal. Because as you know, 60% of your income in the banking comes from home loans. Okay? Comes from home loans. So home loan is a prime product. And in home loan, what is important? Appraisal. Very important. Means whether should I give the loan to this customer? How much loan should I give to this customer? What should be my loan to value ratio? Everything is important over here. Importantly, remember, as I told you earlier, 60% of the bank's incomes nowadays comes from home loans. It has become that important. And it's a secured loan. Mind it, isn't it? It's a secured loan, totally. So that's why follow this complete video, share it with your friends, like this video, subscribe to the channel, click on the bell icon. Okay? Banks need to gather full particulars of, means whenever we do a loan appraisal, we need to gather the particulars of what? Firstly, the land and the building, means the property for which you are giving the loan. Suppose if I am giving the home loan, then I must know that this home is built where? What is the cost of the property in that area? Is the customer fooling me? It can happen, no? That a customer and a builder, it's after all the home loan is given between the developer, the bank and the customer, isn't it? The developer is the one who develops the house, that flat system. So are they both trying to fool you, bluff you, fake you, anything, isn't it? So we have to gather the information, okay, gather the information of land and building, right? What the customer is, means what this land is, what this property is, right? Existing income and the source of it. So source of income for that customer, that is also very important. Source of income. Whether this customer will be able to repay a loan, that's very important part. Repay. If the customer is not able to repay a loan, it will automatically become NPA. For that we have the ratio called as DSCR, source of income. For that we have this DSCR ratio. Okay? DSCR. DSCR ratio. Debt service coverage ratio. This ratio will give you the idea whether this customer will be able to repay the loan or in the next year. There are various formulas for that. DSCR means basically your net profit plus depreciation plus interest on long-term loans. Shall I write it? Here. I'll write it in the short form. Net profit plus depreciation plus interest on long-term loan. Interest on long-term, kindly note, the whole upon. Interest on long-term loan, the whole upon your EMI, total EMI. Now EMI from your bank as well as EMI from others. Okay, plus again this same interest on long-term loan. This interest on long-term loan comes twice. Once in the numerator, second in the denominator. So this is the main ratio in any home loan, DSCR. debt service coverage ratio. Net profit, again remember it, net profit, because this question comes in exam for calculating the DSCR. Net profit plus depreciation plus interest on long-term loan upon EMI, total EMI, kindly note, your bank's EMI plus other bank's EMI plus interest on long-term loan. This interest on long-term loan, remember, it will be twice. Now, if somebody is a salaried person, then for salaried person, where is net profit? There is no net profit. Where is the depreciation? There is no depreciation. So, simply it will be a salary then. Yearly salary will be there. Instead of this total part, I'll have a yearly salary. Even this long-term loans, if you are not having the loan, then what? Remove it. If you are not having, then what? Then there's no question, isn't it? So, coming back. So, existing income and the source of it, whether that person will be able to repay the loan, whether that person will be able to cover our EMIs, how long this income is expected to continue. That is also important nowadays. Nowadays, the jobs are such that these jobs, nothing is stable nowadays, isn't it? Earlier, in 2000, before 2000, the time was that people once in the job up to 58 years, 60 years, no problem. Then after that also pension. Now nothing, isn't it? Now what happens? Now everything is unstable. No permanent job concept. So that is also important. How long the income is going to continue. Now the point over here is, if you are talking of salaried person, then you can talk of the salary up to the retirement or whatever. If you are talking of the business person who's doing the business, in that case, how long it is expected to grow. So for that we'll check what is the history of that person, for how many years this person is in the same business. If some person is in the same business for many years, then it means that person will continue the same business. Chances, here, after all it's chances, probability. So that is what we check it always. Next, existing liability, if any, and monthly financial repayment obligation on the proposed loans among the other things, means among the other things it is. So basically existing loans, how many existing loans do I have? That is checked. Okay, how many existing loans? Now what do you mean by this? Suppose if I am having a personal loan, or I am having a credit card loan, or any other housing loan I have taken, because nowadays 2 housing loans are common. If I have taken any other housing loan, then that EMI will be deducted from my salary or my income. So whether my income totally is okay for this complete loan system. That's why we have this DSCR. I told you that DSCR, all the EMIs are taken, all. Not only your bank's EMI, but the EMI of other banks also, other loans also. It can be from other banks also. So, coming back. So, existing liabilities and what is the repayments here? In this, what do we do? Monthly financial repayment obligation. So, here we take generally 6 months or 1 year bank statement. Generally 6 months is okay. 6 months. 6 months statement we take. Whether of the account for all the loans, all the existing loans. Whether the loans have been repaid regularly, whether there's any delay in the payment, for how many times it is. Once in the blue moon it exists. Sometimes it happens that somebody might not be able to repay due to some unseen situations. But once or twice it's okay. If it's a regular feature, then it means the customer is problematic. Reject the loan immediately. Isn't it? Got it? Next. Now the next term which comes for you in the same chapter is power of attorney. Now understand the concept of power of attorney. What is power of attorney? Power of attorney means an authority given by an instrument by one person called as a donor or principal, authorizing another person called donee or agent to act on his behalf. Now, his means what? This his, you can consider it his or her, okay? Because you can't be patriarchal, isn't it? So, his or her. His or her. Nowadays we use these words, his or her. Because even a female can give a power of attorney, isn't it? Equality. Correct? So the point over here is power of attorney means what? I give you the authority. I tell you, I give it in writing that kindly let this person operate my account. Okay? Or let this person get a home loan on my behalf. Generally, this is done by NRIs. NRIs. You will see these cases in NRIs. Many of the NRIs give the power of attorney to their family members. Okay? So this is the meaning of this is POA. From one person, principal to agent. Principal to agent. Principal it will be. Yeah. Principal to agent. Okay. So basically it means this. Got it? So it can be, understand its meaning. Now there are two things in power of attorney. Sometimes you can give the power of POA for only operating that account, specific account. So you will be operating, I'll be giving you the POA to operate only that account, savings account, current account, or take home loan only for one purpose. That is known as specific POA. So POAs are of two types. POAs are of two types. Say this. POAs are of two types. Okay, specific and general. Specific and general. Two POAs are there. Specific means what? It is always related to one project only, one work. General means I'll give you a general POA, and this POA will be valid till infinity, to the time I close it. See, this is general is always valid till infinity, until I close it, principal closes it, or anyone amongst us expires. Anyone amongst us expires. Up to that time it continues. Specific POA, whenever I give, in specific POA it is always dated. Dated means up to certain date only. That is known as specific POA. The stamp duty acts are applicable over there. Every state will have a different stamp duty act, because stamp duty act is a state subject. So they'll have their own acts for the stamp duties for the POA. Okay, Maharashtra is separate, Tamil Nadu is separate, every state is separate. Now, beyond this POA, there is also a document which gives you the power to operate a specific account. That is called as mandate. Okay. Now I'll come to a typical topic that's called as POA and mandate. Mandate. Understand these words, POA and mandate. Now see this, POAs are of two types. This, specific and general. But mandate is also there. Mandate means what? It's a simple written document on the plain paper, no stamp duty. So for these, there is a stamp paper, stamp duty over here. Okay, stamp. But here it is on plain paper, plain. No stamping, nothing. Okay. So understand this also, mandate. But mandate is generally for operating the savings and current accounts. You can't give the mandate for taking the home loan. POA I can give, if I am an NRI, I can give this POA to my father, mother, anyone, so that they can take a home loan on my behalf. Home loan also, they can take it on my behalf. Allowed. POA. Mandate not allowed. Okay. So understand these concepts very clearly, because in exams you will definitely get the points. Okay. Next. Agreements, letters, application forms required for appraisal process. Now this is the core issue of core point of your and lender's appraisal process. Very core. You will surely get a question on this. Be sure about this. You'll get a question on this. Be sure. Okay, on the documents. Definitely. First is home loan application, but obvious. Home loan application should be there. Okay. Without application, you can't work. Already I have discussed this point. Appraisal form. Now, appraisal form means what? This appraisal form is from your inside. Means it is given from your bank. Appraisal form means we'll cover all the, from this application you'll get the income and various positive, negative list, everything you'll get it. So appraisal form will have the details, we'll get the details from year to year in this appraisal form, and then we'll prepare it. We will prepare it and then check. It is an internal document. We will check whether the person is suiting or whether it fits in the criteria. Okay. Term loan agreement. Okay. Term loan agreement. Now what do you mean by this term loan agreement? Term loan agreement for home finance. Now this, without agreement, can you give a loan to any person? Any loan. Forget it, home finance. Let it be any loan. You can't give. Okay. Without agreement, you can't give anything. So that's why you need a term loan agreement. Now, one point which I need to stress over here. In any home loan, there will be two agreements. Two agreements. Which are these two agreements? Kindly check. One agreement, so don't confuse these agreements. Okay. One agreement is between, one agreement here, two agreements will be there. So kindly note this, okay? Don't get confused. Two agreements. One agreement will be between the builder, developer, builder and the customer. So this is one agreement. And second agreement will be between the bank and the customer. Bank and customer. Okay. So get this very clear. Don't confuse the two agreements. This agreement is a collateral, security. Security. And this agreement is a legal document. Legal. Okay. Legal document. First agreement, we get it before sanctioning the home loan, before. And the second agreement, we do it with the customer after sanctioning, before disbursement. Okay. What is the process of home loan? Means how does this process move on? First, we have the loan application form. Then we do the appraisal. Once the appraisal is okay, we do the sanction. From sanctioning, we do the disbursement. Right? This is a basic rule. And then monitoring. So from sanctioning to disbursement, okay, from sanction to disbursement, okay, I'll show you the steps again. Disbursement, okay, we take legal documents. First is, shall I show it over here? Yeah. See this, first is application form, then second is appraisal, then third is sanction, Fourth is your disbursement. Okay, disbursement. And last one is monitoring. Monitoring is also equally important. Monitor. These are the steps in the loan application, loan process, home loan process. Application, appraisal, sanction, disburse, and monitor. Sanction and disburse here, up to this step, you do all the things. Visit. What do I do in this? I first check the financial of that customer, financials. I check the history of that customer, history. Everything is done up to sanctioning. Okay. Then I do the branch visit. Visit also. Visit is done in the office. So where do I make the visit? Where should I make the visit for any customer? I must make the visit number one in the at the house where the person is residing, and second one, where do I make the visit? At the income place, means where that person is earning the money. It can be an office, it can be a business, it can be a job, anything. So these two places you must definitely visit. And there is also a third place. Which is the third place? Type in the comment section. Which is the third place of visit? Where should you as a banker do the visit in loan appraisal? Okay, let me show you. First, residence. Present residence. Present residence. Right? First one. Second one, present job. Job or income, whatever it is. Here, if it's a business person, then there's no job. Right? So then there's a business. So business place. You can call it anything. Third is, where's the third visit? This is very important. Which is the third visit? Third visit is at the place where the house is built. House site means home site. Home site, you can call it home site. Very important one. Okay. These three visits by any concerned staff, whoever has been given this authority or responsibility, so that person should definitely visit these three places and check. Not only visit, check whether everything is okay or not. Only doing the visit is not worth. I have to check whether the person actually resides there at the existing place. I have to check whether the person actually is working there at the job place. I have to see that the house is being built over there. Otherwise, everything is okay and the house is not built. Then why am I giving the home loan? Isn't it? So, next, let me clean all this. Okay. So, term loan agreement for home finance, then guarantee agreement, agreement letter, terms and conditions. Okay. Then equitable mortgage intent letter. Now, intent letter means what? That person is ready to do the mortgage. Equitable mortgage. What is equitable mortgage? There are in fact, many types of mortgages. One of them is equitable. Okay. One is English mortgage. Second is the simple mortgage. Okay. English, simple. Then you have usufructuary mortgage. Then conditional sale, equitable mortgage. Generally in banks we do equitable mortgage. It's a big story, this mortgage. There are basically three types of mortgage only. In this entire world there are three types of mortgage. Simple mortgage, conditional sale, and third one is usufructuary. One is simple mortgage, simple. Second is conditional sale, conditional sale. Okay, and third is usufructuary, usufructuary. Usufructuary. These are the three types of mortgages. All others, you call it English mortgage, you call it equitable mortgage, you call it any mortgage. These are under these three only. These three are the basics. Some other day I will take it because it is a deep topic. Okay. Kindly understand, equitable mortgage is a part of this conditional sale. Equitable mortgage, bank always does the conditional sale mortgage. It never does usufructuary or simple mortgage. Okay, in simple mortgage, everything is done by the court. Kindly note. Okay, everything, court. English mortgage, that is simple. Conditional sale means I will take the property in my hand if you don't pay my EMIs. If you pay, then the property is yours only. Okay, that is conditional sale. Usufructuary means whenever the property which you are owning and I have given you the loan under usufructuary, then the income from that property up to the time the loan is going on will come to me. So that's why bank doesn't do the usufructuary. Do you take the rent of that house which that person has taken the home loan? Do you take the rent of that house in your account? That rent goes to that person only if that person gives it on rent. Isn't it? Second house. Got it? So, we always do this equitable mortgage. Equitable mortgage is a part of this conditional sale. In equitable mortgage, what do we do? In any bank except some cooperative banks, we do equitable mortgage. Just the documents are given and the amount is sanctioned or disbursed. That's equitable mortgage. No going to sub-registrar office, no registration, nothing. Very simple logic. But nowadays what has happened is, even if you do equitable mortgage, you have to give a notice of equitable mortgage. Notice to the registrar office for the month, complete 1 month. Complete 1 month, whatever mortgages have happened in your bank, you have to give a notice to this sub-registrar and pay the fees also. Okay? Of course, we take that in the administrative cost and ultimately that fees is paid by the customer only. Okay? So, equitable mortgage. These are the main documents which we take. Okay? Next, equitable mortgage confirmation letter of undertaking. Undertaking means where the finance is availed for purchase of a plot. Now, finance is availed for the purchase of the plot means many customers, what do? They purchase the plot and then build the house. So, in that case, you take the undertaking that person will build the house. Otherwise, what will they do? Do you know? Many of the this customers are doing it. Purchase the land, plot. In the form they'll write, we'll purchase the land and we'll build a house. They never build a house. Purchase the land, plot. If the rate comes, sell it. Your loan repay. So what have you done actually? You have financed the plot purchase. So this undertaking means that customer will purchase the land as well as that customer will build the house. Letter to be addressed by the borrower to his or her employer. An undertaking letter from the borrower that the construction will be carried out only as per the plan approved. Very important. Whatever is the sanction plan, we have a sanction plan always. In any home loan, whenever you build any house or any property, you have a sanction plan. So the construction will be carried out as per the sanction plan only. Okay? Letter to be addressed by the borrower's employer to the bank. Later when the applicant himself or herself is the drawing officer. Now, the point over here is, this is known as checkout facility. Okay? This is known as checkout facility. Okay, what is this checkout facility? Checkout facility question comes in the exam. Kindly note. Checkout. Okay, what is checkout facility? Letter to be addressed from the borrower's employer that what do they give to the bank? That they'll deduct the EMI and give you the deduct the EMI from the salary and give it to you. Of course, it's a difficult task. It's not possible nowadays. That's why we have PDCs, post-dated checks we take. See here, PDCs are taken when checkout facility is not possible. Checkout, kindly note this word, checkout. Checkout facility. This question comes in the exam, checkout. Definitely it's there. Okay. Then mortgage deed. Mortgage deed in case of registered mortgage means registered mortgage between this builder and the customer. Okay. Mortgage confirmation letter. Confirmation that the has been done. Okay. Documents in connection with the pledge of other securities wherever applicable. Other securities means many times what happens, the home loan is huge and the property value may not be that much, but you have to accommodate that customer. In that case, we take some collateral also and give the loan. But that is very serious condition if the customer is having good relations with you. Only in that case. Otherwise, no. We follow a LTV ratio concept. What is LTV? Loan to value. LTV. Kindly note this. LTV. Loan to value. Your home loan should always be lesser than the value of that house. Always. If my house is costing me 1 crore rupees, then loan should be less than 75 lakhs. 75 or less than 75. Okay. So that is known as LTV ratio. But in some cases, something other relationships are there with the bank. So the bank has to give some higher amount of loan. In that case, we take other collaterals also, other security. Means collateral means I can take a FD also. Simple. If I take a FD of that customer, then what's the big deal, isn't it? The sanction amount is 75 lakhs and the customer is giving an FD of let's say 50 lakhs. I can give it as simply it's an FDOD concept only. So I can take this lien and give it, isn't it? So that simply becomes your FDOD, isn't it? Now see this, kindly understand, in lender's appraisal basically relates to the secured loan. Here we are specifically talking of home loans. That's why it will cover all these specific points related to home loans. Every loan will have a different angle, different way of this analysis. Whereas in home loans, see, commercial loans are totally different. There we look at the business part. What are the further valuations? Here the important ratio which you get is DSCR. Kindly note, DSCR is one of the important ratios in this. Now what is DSCR? Let me cover that also. Before going, let me cover this. DSCR. See, DSCR is basically very important ratio, and you'll definitely get a question on this. DSCR, debt service coverage ratio. Okay, it is your total incoming money. Means for a businessman, it is net profit plus interest on long-term loans. Okay, plus means total whatever is incoming for you plus depreciation. You can add depreciation also. For salaried person, it is your salary, because salaried person won't have the income, net profit, depreciation. Salaried person doesn't have anything. So it can be for businessman, it is the first three, and for salaried, it is salary upon denominator. Total EMIs. Total EMIs on whatever you are having, right? Total EMIs. If I am a salaried person, I am having, let's say, earlier 2-3 loans. So these EMIs will be added. Plus again, interest on long-term loan. So here again there are two parts, EMIs plus interest on long-term loan, interest. Okay. And in numerator, it depends on what class of customer you are. If you are a business person, then net profit plus depreciation plus interest on long-term loan. See, this interest part comes two times, once in the numerator, once in the denominator. If you are a salaried person, then you'll have only salary over here. Okay. So that was the point, and this was the lender's appraisal process. Now, before going, I would suggest kindly join the Adda 24/7 batches. The new batches are just starting now. Remember, officers batch. Join this officers batch. Look at this, officers batch. Okay. Now, this is for CIB, similarly for JAIIB. Look at this, officers batch JAIIB. Click on this. E-books, mock tests, online live classes, recorded sessions, everything you are getting. Okay, plus remember, now you are getting a discount of almost 81%. How's that? Let's see. See this. Click on buy now. Never forget the code Y432. Y432. Click on enter. See this. 80% discount you are getting over here plus 1% extra through the app. Download the app. Okay. So 81% net you are getting. Also, you can join the Mahapack. See, this increment Mahapack of JAIIB is one of the best Mahapacks for you. there you will get this batch also. So here you are getting double validity. Right now, if you buy for 6 months, get it for 12 months, buy for 12 months, get it for 24 months, isn't it? Plus 81% off is already there. But for that, again, remember, don't forget the code. Right now, the GOAT offer is going on. You are getting 200 rupees extra Amazon voucher on this purchase of Mahapack. So don't miss this, okay? And in Mahapacks, kindly note, you get 15 plus batches per subject. Per subject, it's that huge, okay? So join us up, the officers batch or the Mahapack, anyone.